And good afternoon. Welcome into Market Talk for Tuesday, March 9th, 2021. Good afternoon. Thank you for joining us. I'm your host, Jesse Allen. Great to have you here with us. MarketTalkAg.com. That's our home on the web, MarketTalkAg.com. You can find us on Facebook, Twitter, Instagram. It's all at Market Talk Ag, and find our great radio affiliates on our website, as well as all of our streaming sources, including Spotify, Apple Podcasts, iHeartRadio, Amazon. You can find us with your Alexa and so much more. Find it all online, markettalkag.com. Well, we had a March WASDE report come out today that was rather disappointing for many of the bulls in this market trade, but we ended up finishing okay on the grain trade here today. Let's talk about all of it. Let's bring in our good friend Matt Bennett with agmarket.net. Matt, good afternoon to you. How's things up there in Illinois today?
Well, it's a beautiful day for one thing, so I hate to even be in the office. So I thought I'd call you a little early so I can maybe get out of here. But I didn't know we were doing this today. I knew it's Tuesday, so somebody was going to do it. But I got to say right up front that I can't be as well dressed as Brian Split every day. So I look like I just walked off the street in here. But hey, it is what it is. So.
I love that. I love that. Well, you know me, I'm always pretty casual when we do this show. So I joked with Brian last time. I said, you're going to make me start wearing a sport coat now when you're on.
Yeah. Well, my office is about, I don't know, 4 or 5 miles from home. Like literally, it's just right in town. Mm-hmm. And so, on a typical day when I know I don't have, to do anything virtual or a presentation or be on TV or something like that, I just wear whatever I want to wear. So it is what it is. But yeah, I mean, the report, in all honesty, it could have been better. There's no question that I think the one thing that kept us from really getting hurt today, as far as price action was concerned, is that we came into this report with way less expectations than we did the February report. The February report, everybody's all bulled up, thinking, hey, you know what, the USDA is going to bring all these export sales to China, throw them in the spreadsheet, and we're going to have a pretty good day. You come in here in March, and the average trade guess was just a little bit of a drop, for corn, a little bit of a drop for beans, nothing too substantial. And so whenever you didn't get a drop, trade's just like, whatever. It looks like the USDA, like I told you before we went on, the USDA's punter's getting wore out, because they keep using him. But, USDA has all the ammunition in the world to be able to drop this corn carry out due to big exports. I mean, we've got big inspections too. Yesterday, we saw big inspections second week in a row, and it's exciting to see. And so keeping prices from just flat out exploding because you threw a 1-2 or a 1-3 carry out, it could encourage more sales, corn sales. And if we do get that, I think they could complicate the problems on farther down the road, but I guess we'll know more later.
Yeah, very, very true. I'm going to pull up some of the numbers on the video screen, and really, like you mentioned, just not a lot of changes. I did notice a slight reduction on Argentine soybeans, and then a slight bump up in Brazilian soybeans, and a few changes on the wheat side of the equation. But really, yeah, just nothing really changed from that February report. And like you said, the trade just kind of shrugged it off after a little bit of a bearish reaction initially, and we ended up finishing okay on the day, especially on the new crop side for corn, beans, and into wheat as well, Matt.
Yeah, absolutely. And so getting to the South American, it seems to me the USDA typically lags a little bit, several of your quote unquote experts. And so it looks to me like we're kind of seeing the same thing again. Now, I don't want their job. I'm not trying to be too critical, but I do think the hot, dry weather in Argentina is something that a person has to pay close attention to, not to mention the lack of being able to get all the beans harvested in Brazil, where they're wanting to get this safrinha crop planted. I mean, they are putting themselves in a situation kind of like 2019 for the U.S. producer, where they had to bet on Mother Nature really treating them right through the summertime frame. So, I mean, some of the safrinha crop is going to go in the ground, kind of like us planting June the 15th. And if that's the case, once again, Mother Nature has a lot of pressure on her, to be able to come with a fair amount of rain and not too hot of weather throughout the rest of the year. And I think that's what they're concerned with. If you talk to the Brazilian producer, some of the folks that I've chatted with on Twitter and whatnot. But bottom line for me is, we're going to find out later. I think the USDA is going to have to bring those production estimates on corn down just a shade. Be very interested to see how the soybean production gets impacted, considering they're just continuing to get pummeled with rain, in Brazil. And so I think kind of maybe those both the corn and soybean estimates might come down somewhat. But regardless, Jesse, even if they don't, what we all have to understand is that what U.S. is going to have big acres and big production this year. Your carryout estimates are not going to withstand anything less. And so I think it gives a little bit of an underpinning. And it's part of the reason why, as you suggested, you see new crop prices staying very well supported. 485, 484 and 3/4, call it what you want. But in 1262, I mean, this could be the best year that producers have seen in quite some time, as long as we don't mess it up too bad.
Well, and you're talking weather. Obviously, South America is the big focus right now, but planting is going to happen here in a few weeks in the U.S., and that drought monitor keeps getting a little bit bigger. And I know some guys and gals are saying, I don't even want to hear about that, until we get this crop in the ground, and then we'll see what it's like as we get into the summer months. But I know there's some chatter out there that's starting to become a storyline as well if we continue to get hot and dry, especially in the Western Corn Belt, Matt.
Absolutely. Jesse, I actually had my first in-person presentation out in Liberal, Kansas here a couple weeks ago. They're dry. Man, are they dry. A lot of irrigation goes on in that part of the world. But, some of those producers were telling me, hey, you know what? I may switch some corn over to milo. Their milo basis for fall was running around 50 over, whereas their corn basis for fall is running around 20 over. Now, granted, typically milo is going to yield corn's going to yield just a little bit better, but putting the milo on the ground is a little cheaper yet. So I think there's going to be some interchangeability on some of these crops, especially in what you would call maybe a fringe area. And I don't know that. One thing I will say, that part of the world with it where the irrigation is, they raise better corn than what I do right here in Central Illinois on some of those irrigated acres. So I wouldn't call them fringe. They've got more options, if you will, on different things to plant. And there's quite the demand in that part of the world for milo, sorghum, you name it. There's even some cotton in that part of the world. But, I think when you get in the Delta, whenever you get to the panhandle of Texas and some of these areas, I think some of these cotton acres could actually be impressive. With $85 cotton. So there's going to be a lot of interesting moving parts. But I will say, if I don't get on here again before planting intentions, I think that planting intention number could be awfully large. I know the USDA said 92 and 90. What if we're 94 and 91? I know that would be an all-time record by a landslide, but when you see these sort of profit margins, typically a fence row to fence row discussion is something that a lot of folks are having right now.
And I think that's going to be very, very key here coming up in a couple of weeks, as those planting intentions numbers. And, overall, looking at corn and soybeans and looking at this story, it would seem to me, we talked about this many, many times, but, as farmers are getting ready to hit the fields here in a few weeks and they're looking at price levels right now, especially new crop here the next couple of weeks, it seems to me it would make sense to at least get a floor locked in here with where these price levels are at right now, Matt.
Absolutely. I couldn't agree more. And I preach it all the time. If you've got major profit margins on the table, you got to lock in something, at least quantify your situation to a degree. And I know someone might say, well, why would I want to sell at this level if I think we're going to get a chance for $5.50 or $6 corn? Well, when was the last time you sold $4.85 freaking corn before you even put it in the ground? Come on, let's be realistic here. So at least set a floor into the market. Give yourself flexibility. If the put expires worthless, hey, you know what? You just had one heck of a good year. Because most likely those prices just continue to rally, or they at least stay the same. And so I'm big on flexibility this year. I've been preaching it. I want to be very flexible. And what I mean by that is I don't mind, for instance, one of the strategies we've talked about, it's like buying a 480 put option and selling a $6 call, and maybe selling a $4 put, for 16, 18 cents. I like that strategy quite a bit. But I don't want to do it on more than a third of bushels, because I remember people doing stuff like that in 2012 as the market rallied, and then they ended up not being able to raise the crop. And so I don't want to put a lid or a ceiling on too many bushels, but by all means, quantifying that level of profit margin on a 30-year acres, boy, that makes a whole lot of sense. And so, again, one other thing on this, Jesse, is that 1262 beans, you are not far away from being $1 over your spring insurance price. And whenever you're in that situation and you talk about selling insured bushels, you know what? Whenever you're that far above your insurance price, you're actually making better use of your insurance policy because you're able to sell less bushels because you're so much farther above the insurance price. So, and corn is no, corn, you can't scoff at corn whenever you're looking at almost 30 cents above the corn price for spring insurance already. And we're only, 9 days into March? It's just an incredible rally we've experienced these last 3 weeks.
I'm glad you mentioned that insurance price too, because I know that's another big factor that farmers need to consider right now with their marketing plan. On the wheat side here, Matt, real briefly, we talk about that planting intentions and acreage and some of these areas that maybe we won't see wheat acres. Maybe it'll go to corn or beans or milo or cotton or et cetera, et cetera. And I know that we saw a larger than expected decline in projected global wheat stocks in today's report. That was maybe one of the few changes out there. What are you seeing on the wheat side of the equation? Anything we need to pay attention to for our wheat growers out there?
I don't think that we can go to sleep on wheat prices necessarily. The thing is that, if you do have global drop in wheat, the thing is that your stocks to use ratio, both US and world, are tighter than what we've seen in quite some time. Now, granted, I mean, compared to corn and beans, they're not exactly tight. But for wheat, they're tight. And so, for me, I've got to think these wheat prices are going to stay supported for the time being. Spring wheat acres might end up being a welcome surprise, depending on what your moisture levels look like and how much producers want to throw $400 or $500 into a corn crop. I think that there's a lot of things that could happen there. But I think moving forward, the thing to watch on wheat is just simply, what do these storms look like that come through over the next 2 or 3 weeks? Are we going to be able to heal up? Are we going to be able to ease some drought in the western corn belt? Because if you don't get in the plain states and you have good weather, then abandonment could be a pretty big issue, I think, moving forward.
On the livestock side, we finished fully higher in cattle and hogs here on Tuesday, and that WASDE report thankfully didn't shake up much of that support that was rallying in livestock. And looking on the beef side for production, in the WASDE report increased it by 40 million pounds. And looking at things here today, feedlot country, a lot of folks are wondering if we finally put a bottom in, if we could start to maybe generate some higher cash trade. I know we're getting 116 asking prices in the south, nothing in the north yet. What are you hearing on this cattle front? Have we found a bottom, and are we going to maybe start to trend this thing a little bit higher?
It sure seems to me that we found a bottom for the time being. I don't know that looking at the calendar, I think you're getting into the time frame where as the weather gets better, demand's just going to do nothing but keep getting better. And this year, God forbid we have barbecues with our neighbors. If people are able to not fear getting in trouble, for gathering and whatnot, you're going to have a lot of folks. And they're going to be wanting to grill a whole lot of meat. So I think that you're probably looking at beef demand being fairly strong moving forward. And I've been a big fan of cattle prices in the third and fourth quarter for quite some time. I've been pleasantly surprised about these first and second quarter prices. And looking at almost $120 cattle isn't something I thought we were going to enjoy, but I'll take it any day of the week. Now that tells me that I think looking forward as a futures market, I don't think that you're going to see these cattle prices dip substantially moving forward, which is a good thing because feeders have crept up a fair amount, and for a person to be able to buy the feeders, pay for expensive feed, as we know, it gets fairly snug. And so I think that the person buying feeders right now is kind of stepping out on a limb, and the cattle feeder typically acts on faith, I understand. And I think there's something they're going to have to do again this year because it's pretty snug whenever you look at the ratios.
Well, and you look at those third and fourth quarter prices on the feeder market and the live market. I mean, you hit it on the head. There are some really good prices out there. And even though with these front months, still some really solid prices as well. And I'll be interested to see this week, feedlot country, just what we get out there and see what kind of trade volume is out there. I think that's going to be really key here as we get into the back half of this week, Matt.
Yeah, there's no question about it. What are we going to see come to market? I think it's certainly going to be something to pay close attention to. Looking at, for instance, hog prices. $96 whenever you get, you've got some extremely attractive hog prices as well. So, I think that one thing about it is, I think pork is going to be, it's not going to be cheap, so to speak, especially relatively speaking, compared to what we've seen in the past. And so to me, I still think this beef demand is going to stay very strong. For anybody who's thinking about saving a whole lot of money buying pork chops, they're going to take a look and they're going to say, holy smokes, I'll just stick with the T-bone.
Yeah, that's a very good point. And you look at hogs, look at some of those summer months. I mean, we're 97.07 on July. I mean, we're pushing almost $100 hogs there in July. That's crazy to me, Matt. Just impressive the strength in this hog market that is continuing. And even despite, the WASDE report, we dropped pork production by 30 million pounds, and we still finished strong here on the day in the futures market. Just really impressive, Matt.
Yeah, absolutely, and I think that's something you're going to see for a little bit here. Is the Chinese have this, I guess, this program of ramping up production significantly. It just shows what their taste buds have done. They just continue to want more protein, and they want pork. And anytime you've got the world's largest group of people, if you will, it's not the largest economy yet. But the largest group of people, I mean, there's no question if they're all eating pork chops, we got to pay close attention to that because the demand's going to stay very robust.
Very, very true. Matt, any other final thoughts here today? I know it's a busy one, and like you said, nice weather outside. I want to let you go so you can enjoy it, and same here. Any other final thoughts you have for us here today?
Yeah, I think my final thoughts are going to be similar to what they usually are, but I would say this, you know what? You're looking at extremely good prices on the board, but this year you got to stay flexible. That doesn't mean that we sit on our hands and do nothing, but I definitely want to quantify some of our situation. Take a good thing and do something with it, because if you're selling at 484 basis the board and it's your worst sale, you're going to have one heck of a year. So, spread your risk out. Don't put all your eggs in one basket, and let's make some money here in 21.
Well, Matt, I know you guys have great insight and expertise with your entire team and on your website, agmarket.net. I know you guys have webinars and everything, and also your app as well. Folks can find that and find some great information there, can't they?
Yeah, absolutely. Agmarket.app. There is a free 2-week trial. There are a lot of folks are on that and they love it. I mean, it's a profitability app, and we also offer our commentary through the app, which is nice because you can just listen to it through your Bluetooth going down the road. But a lot of good tools with the app as well. Agmarket.net is where you can find all of our contact info, all of our research, and link up to the app if you don't find it the way I already told you. But agmarket.net is a great place to go to get good information.
Agmarket.net, agmarket.app to find the app as well and get that downloaded. Matt, appreciate the time. Thanks for joining us here today, and have a good rest of the week.
Absolutely. Thanks, bud.
Matt Bennett with agmarket.net, our guest today here on Market Talk. That's going to do it for the Tuesday, March 9th edition of the show. Find us online, markettalkag.com. I'm your host, Jesse Allen, wishing you a great afternoon.